So what's going to happen with the markets? What's going to go on with crypto? What's going to go on with stocks? What's going on with the economy? What's going on with everything? I'm going to give my thoughts. I spend literally 12 plus hours a day, every effing day, thinking about this, researching this. And it is a complex animal. So watch this video. I'm going to share with you everything I know so far. So to start, there is a tremendous amount of sell pressure in the markets. Everyone is looking to sell. Everyone, exaggeration, but massive majority are on, have put options, have sell points where, if it shoots up just a little bit, it'll be selling to push down. The machines for the big organizations like JP Morgan, Chase, investment institutions, their machines are all selling. Even retail is starting to sell. This is the first time retail has been more net sellers than buyers this entire effing time. That's right, believe it or not. Now, with that being said, when retail starts selling, which is you, me, normal people, when retail starts selling, because they're also generally the least sophisticated investors, right? No doubt about it, right? We got full-time, billions of dollar investing institutions that this is all they do versus regular people, right? Regular people are not sophisticated compared to that. You, me, let's deal with it. So retail is finally starting to be net sellers instead of net buyers, because this entire year, believe it or not, retail has bought the F and dip, bought the F and dip, bought the F and dip. Now I've been buying, I've been DCA, but I know damn well it's going to go lower and I have a much further out time horizon, but I don't think I'm the norm, right? So regardless, the numbers are the numbers. And this is so important to know. Net sellers versus net buyers. Retail, I've been waiting for retail to capitulate, and they're starting to. There's a lot of ominous signs on the horizon. So I'm going to get to the other side of that in a second. Keep watching. There's a lot of ominous signs on the horizon. So everyone's bearish as bearish can be. I really mean that. There's different charts to look at, but it's the bearish time in the markets, crypto, stocks, bond market, all the major markets, that there has been, real estate market, that it has been since, it's even more bearish than 2008, if you can believe that. Whew. So that's a lot, right? But now let's get back to the retail starting to capitulate, becoming net sellers for the first time all year, right? Net seller versus net buyer. This is important. So retail, the less sophisticated buyer, you, me, regular people, which accounts for a good chunk of money in the markets, no doubt about it. Now, when retail starts to sell, it at least is the beginning of a bottoming process. And so I'm getting to the point that I think we are coming into a bottoming process. With that said, I'll give you my thoughts on that in a little bit. Stick around. Have we bottomed, or is there further to go? I will get to that. Let me lay out more of my thesis. So what do we have coming up here, right? We had the jobs report last week. That came in bearish, right? There's still way more job openings than jobs, than people, than unemployment. So that net is still on that side. So that gives the Fed all the clear way to just keep raising raising the rates, right? So that's going to be bearish for the economy, for the markets, for everything, because the Fed is literally trying to bring down the markets, right? They're trying to bring down the markets. They're trying to raise unemployment. They're trying to get rid of shit zombie companies. They're trying to raise the value of the dollar and bring the economy back into equanimity. That's the word. Needs to be done. Straight up, my opinion, needs to be done. We got way overinflated to the upside, hence inflation being very high. Obviously, they want to bring inflation down dramatically too. That has to do with resetting all of this and raising the interest and everything like that. So on the other side, this week we have the CPI report, the inflation numbers. Okay, so the inflation numbers estimated to be 8.1. Guess what that's going to make the Fed want to do? Keep course. It's going to keep them super hawkish. If you don't know what hawkish means, that just means they are looking to lower the value of assets, increase the value of the dollar, increase the interest rate, bring on recession, raise unemployment. It's all stuff that people typically don't want, but is necessary for a balance in a world going forward. So that looks pretty bearish. So hence all the people looking to sell, all the puts out there. We're at record-setting amounts of put options. If you're unfamiliar with what that means, a put option is when you look out to a further date and say, say Ethereum is at $2,000, and you're like, I think if there's a good chance by December Ethereum's at $1,000, which means you get to sell if Ethereum, the lower Ethereum goes, you get the right to sell it at $2,000. Okay, you wouldn't want to do that if it was going up. You'd want the right to buy it at $2,000 if you thought it was going to go up. You get the right to sell it at a higher price by a certain date. Okay, so that is a very, very bearish outlook. And that's not just like, people talking. Obviously, people are talking, but that is actually everyone putting their money where their effing mouth is in terms of where they think this thing is going. Now, I'm going to get to what all this means, because you're also thinking, well, if everyone's doing that, maybe we should look the other way. Maybe not. I'll get to that. So that's what's going on there. And then we're also in earnings season for Q3. Okay, big companies. I believe next week, or is it this week? What's the date today? The 9th, I think, of October. I think next week is Netflix, is the big one on there. But there is a big, there are a lot of companies with earning reports coming out. Now, the very important thing about that, hear me on this. Don't leave this video. Keep listening to me on this. I've spent hundreds of hours in the past month just studying this. And I spend that kind of time every single month. Just hear me out. Now, do you know what a PE ratio is? A PE, that's price to earnings ratio, is what that is. So when something has a certain amount of earnings, the price is on top of it, price divided by earnings, and that's what they call the multiple. Okay, that's what they call the multiple. Now, when something is trading, they say, 20x multiple, 25 ratio, 25x earnings. That's what they're saying, is they're saying the price of this stock is 20 times the earnings, 10 times the earnings, 15 times the earnings. For the past 2 years, we've been probably about an average of 25 times earnings, which is crazy. It is batshit fucking crazy. That is a massive overvaluation of anything. Imagine, hey, how much do you make? I make $100. Okay, let me give you $2,500. What? Okay, what? I make $100. You think I'm worth $2,500? What the fuck? So that's where we're at, and still we're currently roughly at about a 17x. And we've had what's called multiple compression, where the price has been coming down, but the earnings have not come down yet. So when the earnings come down, which I very strongly think they will, and so does everybody else, right? That's what happens in a recession. Earnings go down. Companies are doing hiring freezes, and they're starting to lay off. I even read that Facebook is going to start laying off. That's a tipping point to me. So at that multiple, 17x earnings, what if earnings go down? And you stay at 17x. If it's earning $1 million this year, so you're valuating it at 17 million, what if earnings go down to 800,000? And you still stay at 17x? Well, guess what? Company's not worth 17 million anymore, is it? Even though it's at a 17x. You 17 times 800 is what? Well, it's 20% less than 17 million. So what is that? 13.6? That is a very realistic outcome. That is a very, very, very realistic outcome. Is that earnings will be down several percentage points, right? And that's going to knock down the PE ratio, which would be the price. The price has to respond accordingly to the earnings. Even if they keep it at the same multiple. Are you still with me? Hit the like, hit the sub. And everyone's expecting that, okay? Everyone's expecting that, so that's interesting. So let's get to that point. If everyone's selling, should I be buying? If everyone's selling, should I be selling? What should I be doing? Tough to say. Tough to say. Do you believe earnings are going to come down? I do. So even though everyone's looking to sell, if earnings do come down, the price, PE ratio, price over earnings, the earnings come down, the price has to also come down, even if it stays at the same multiple. It doesn't make any sense that the multiple go up if a company's making less money. You get what I'm saying? So I don't see a world where prices don't come down. That is definitely where I would put my horse, and it seems to be where every other dog is putting their horse. Sometimes, when the majority are doing it, especially the sophisticated investors like the big investment companies, JP Morgan, all that stuff are doing it, maybe it's good to go with it. So I think things are coming down. Could I be wrong? Absolutely. Absolutely. Even these big institutions are wrong as hell all the time about what's gonna happen, right? Because no one can actually predict the future, although these big institutions can have quite a bit of influence on it. So that's what I think. That's what I think. That's what I think. I do think we are going to have a drop. I do think we're going to have a drop because who's expecting a bull run right now that's a sound mind? What's the case? What do you got? How could there possibly be at this juncture? Now, with that said, this next leg down that I believe is coming this month, I believe it's coming by the end of this month. I think that's the final leg down for the stock and crypto markets. I think that will be the final leg down. That's what I think. My opinion, not financial advice. But I think that'll be the final leg down because I also study the shit out of charts. Study the shit out of them. And there are patterns to the way things go down and go up. These crashes that happen, look at 08, look at 2000, look at ones prior, you'll see a lot of time they have a pattern of the way they go down. They have a big leg down, then a big bounce, big leg down, big bounce, one more big ass leg down. And then typically they form what's called a base. A base. So they, because no one really wants to buy, but no one wants to sell anymore. It's like, goddamn, it's so low. I can't sell this. And people are like, shit, I mean, it might go down. This is so bad. I can't buy it. So the market just goes kind of flat for quite a while, forming a base for the next true upward motion to go, making an actual bottom. So I think it's quite possible a bottom is near. Call it a bottoming process. I do not believe we are at the bottom right now. I think we have another leg down. And if not, great. Fucking great. I hope not. I hope we don't have another leg down. I'm tired of it. Like I've bought stuff, I've got stuff, I've got my bags. I'm fine if it goes down, I'll buy more. But I'm just kind of tired. I just want shit to go back up. As I'm sure you do too. Life's just better when things are going up. So I got for you today. Hit the like, hit the follow. Beautiful day, huh? Out here in sunny Seattle. Smoky today though. Must be some forest fires around. So I got for you.